Welcome to ATS. In case you didn't know, we are officially on the hunt for the holy grail of automated trading strategies.
And today we are looking at strategy number 2.
That's right, the MACDAX Enhanced Trading Strategy with HMM filtering.
It's a mouthful.
It is. Now, before we get too excited, let's just do a quick reality check here. This is all for educational purposes.
Always remember that.
Trading futures, it involves a substantial risk of loss. And past performance, these back tests we're about to talk about, they are absolutely no guarantee of future results.
That's at the farm. Seriously.
Okay, so let's get into it. I think if you're listening, you're probably somewhere on what we call the trader's journey. Maybe you're paying tuition to the market right now, losing money, or maybe you're at that break-even point, just churning fees.
That frustrating spot.
Exactly. We want to get you to that next step. And today's deep dive, I think, is a perfect example of how to bridge that gap. We're looking at a classic strategy number 2.
Right, the original. It was a pretty standard trend-following setup. I mean, the idea was simple.
So what was the entry?
You'd go long when the MCD crossed above its signal line, but, and this is the key, only if the ADX confirmed the move.
Trend is your friend, right? Sounds logical.
It sounds logical, until your friend is costing you a fortune in commissions. The logic itself wasn't bad, but the execution, it was messy. The strategy had this massive problem we call capital churn.
So just taking too many trades.
Way too many. It was just spinning its wheels to make a tiny profit. It was like, I don't know, running a whole marathon just to pick up a quarter off the street.
Yeah, nobody has time for that.
Exactly. And it gets back to that golden rule we talk about. Time in the market is time at risk.
Right.
You don't want your money exposed unless the conditions are, absolutely pristine. The holy grail isn't just a winning strategy. It's one that wins fast and gets out.
So the team took this churn and burn engine, as you call it, and gave it a huge upgrade. Bolted on a modern filtering system.
The standard template.
And the results from the simulation were, well, pretty staggering. It showed a profit of $38,000 over just 4 months.
But here's the kicker.
What's that?
It did that on just 18 trades.
Wait, 18 total?
18 trades in 4 months.
That's less than a trade a week. That's some incredible patience.
That's the difference between a gambler and a sniper.
Right.
Right. The secret sauce here is something called the HMM filter.
HM sounds like the noise I make when I'm looking at a choppy chart and I have no idea what's going on.
Well, you're not wrong. It stands for Hidden Markov Model. Basically, you can think of it as a really sophisticated market weather report.
Okay, I like that analogy.
It scores the market conditions. Like -2 is a total hurricane, do not trade. +2 is a perfect sunny beach day.
And was it looking for a bullish or bearish regime for this strategy?
That's the most interesting part. The optimization showed that volatility only was the winning mode.
Volatility only, so not direction.
Nope. It just compares the current ATR, the average true range, to its 50-period average. If the market is just screaming and whipping around, the HMM says unsafe conditions, and it blocks the trade.
So it saves you from yourself during the chop.
It forces the strategy to just sit on its hands.
Yeah.
Until things calm down.
I love that. Okay, we have to talk about the time frame because the research found this sweet spot that is, well, it's just kind of weird.
The 36-minute bar.
36 minutes, not 30, not 60.
36, it sounds completely random, I know, but you have to remember, the market doesn't own a watch.
Good point.
It doesn't care about our nice, round human numbers. The testing just showed that the signal-to-noise ratio was best right at that 36-minute mark.
It's a great reminder. If you're just using the default settings on everything, you're probably trading the same noise as everyone else.
100%.
So we have this smart filter, this quirky time frame. But the other big piece of this update is what's called the standard template protections.
Oh yeah, this is the stuff that keeps you from blowing up your account on a bad day.
So what's in there?
Well, they're hard-coded in C#. First, session filters. The research showed that certain hours, like 5 a.m. or 10 a.m., were just statistical black holes for this strategy.
So the bot just doesn't trade then, locks the door.
Exactly. No trades allowed, and then there are hard limits.
Like a max daily loss?
Yep, set to $500. If you hit that, it's done for the day. No revenge trading, no trying to win it back.
Smart.
It also caps the number of trades at 10 a day, just to prevent overtrading on a really choppy day. But you'd almost never hit that with the HMM filter anyway.
And for the trade itself, the execution.
It's all bracket orders, a fixed 40-tick stop loss, and an 80-tick profit target.
So a 2-to-1 risk reward.
Right. And there's a trailing stop in there too, just in case you catch a runner.
Yeah.
It turns a messy, blunt instrument into a precision tool.
It really proves that the difference between breaking even and being profitable often isn't the entry signal, it's the filter.
Absolutely. Knowing when not to trade is the real edge. Context is king.
Let us know. Does any of this resonate with you? Have you tried this strategy? How did it perform? Post your comments below. I want to know so we can add better features to the next strategy. In total, we have over 100 strategies on Substack. Follow the bunt. We're ATS, Automated Trading Strategies, and we're just getting started.